Hello my friends, I'm Rocky Outcrop, this is Bitcoin Technical Analysis. After I've finished recording these videos, I'll be going over to the Discord and having a live chat with people about trading, and that will be great at 5 PM UK time. That'll happen every Monday, by the way, so be sure to join the Discord if you want to take part in that. It's great, no need to talk, you can just listen if you'd like to. Let's take a look at the charts together and dive in straight into things. What do I have behind me here? Only the CME charts at the minute, and what are we going to be looking at? Well, things have been going along quite well. At the minute, you can see the prices are 10,805. The contangled nature of the prices there operating at 10,805 on the CME futures versus the spot prices of 10,730 is apparent, with an over $70 premium towards the top side right now at the time of speaking. So that's quite good to see. That's positive. What could possibly go wrong? There's a couple of things then that I actually wanted to talk about here in today's episode. And as you can see, I've got notes up behind me. I've not done the notes thing in quite a while. I hope that you like to see them here again. If you want to see notes all the time, let me know. A bit more work goes on to making videos if I have to put notes on, so it's not something I really love to do, but I can appreciate how it helps with people. And let's do this then. I'm going to make today's videos quite brief as well, because as I say, I have to get over to the Discord and take part in that chat. What we have here, we've still got our gaps on the chart. So first off, let me just bring up the big gap, the biggie. This is the big gap on the 24-hour chart at 9,850 up to 9,700, or down to 9,735. If I just stick that on there, you can see that's where that gap is. Starts off over here, partial fill here, and it still remains in place. Okay, but what other gaps do we have? And is there one on the daily time frame from this weekend? Well, the quick answer to that is no. But do we have a gap on the lower time frames? And when I looked at this earlier on, there was one on the 12-hour time frame and below. So let's just analyze this real quick. Here are our candles. You can see a big wick up here and a wick here on today's price action, having meant that there's no gaps on there for that time frame. Diving down the way though, immediately you can see from the 12-hour time frame and downwards that there actually is a gap. So what I'm going to do here is put a horizontal ray in. Just stick a horizontal ray in towards the bottom end of this gap here on this time frame. And now we can just continue to look down the time frames and see how that gap kind of is, operating for us. As you can see, as I go all the way down the time frames, that there it is down below the current prices. So what are we looking at for this thing? That's actually 10,625. So if we were to have a $70 premium on the CMEs, as we've already discussed, and it went down to 10,625, then you're looking at 10,555 or so in terms of where we could see the prices going to get this thing filled in with regards to the spot prices. On the 1 hour time frame, you'll see that we have had a death cross here between the 50 simple moving average and the 200 simple moving average. Of course, this is a very low time frame. Going up the time frames, you can see from the 2 hour upwards that, of course, that's not the case as yet. And with the 4 hour time frame, you can see that, well, we are in death cross conditions from all the way back over here and quite a ways from it just now. But what's the interplay that we're looking at with these things? Well, we have all three of on the 4 hour time frame, we've got the 55, the 21 EMA, the 55 EMA, and the 50 simple all coming in at around about that 10,730 area. Looking down the way again, the 50 simples down there at where that gap fill kind of region would be coming in at around about, just the last sort of port of call along the way towards that, and our previous low in terms of this 1 hour time frame. And that would be obviously changing things up from having a pattern of lows and highs and higher lows to potentially looking at things slightly differently at that point. But we also have the 200 simple in here at 10,730 and a confluence of all the moving averages really that I use on the chart in there at that price point. On the 12-hour time frame, you can see that while we might not have the confluence of moving averages in and around the gap area or the previous low that we were looking at on the lower time frames, that we have the 50 simple and the 21 exponential just right here at the foot of our most recent 12-hour candle at 10,730. Perhaps then, of course, when we look towards this price, it might be a crucial area for us if we were to then consider perhaps coming in here for what could potentially be a higher low in this small term structure. Now, just going back over here to the 1 hour real quick then to kind of, reiterate that 5 minutes into this video, so I'm going to need to wrap this up quick in terms of this little point. That we've had a high here, a higher low in here. Is that right? Yeah, just we got a higher low. So a low, a high, a higher low, a higher high in this area here. Could this ultimately be the higher high that we have right now and come in for a higher low, filling in the gap? Where could we be in terms of the price action in this one if we were to stay, in just the structure of this 1 hour time frame trend from the 1st of October up to where we are now? Well, anything above 10,485 would be a higher low on that front. So if I just then go back up towards the 24-hour time frame and check in with our notes again, you can see how this then all sort of ties in with the pattern still being in play. If we were to come down and do any of those things, then of course we'd still be inside the range of this ascending triangle that we've got drawn on the charts here. And there's a question mark about this, if this is an ascending triangle or not. Over on the spot prices, I perhaps want to point this out as being more of a symmetrical triangle, but we'll talk about that in a moment. We're challenging the 21 EMA just now, as you can see, that comes in there at 10,780 here on the CME charts. Now, of course, I will be looking at spot in just a minute. Going to try and get this video done in the next 4 minutes or so. And we will look at that triangle as well. We'll check out the traffic lights on the spot chart, and we'll also check out the triangle on the RSI, and we'll remind people once again at the end of the episode about the voice chat that's coming up at 5 p.m. GMT or British summertime or whatever we're in at the minute. 5 p.m. UK time, so 1 New York. And right, so this here is an ascending sort of wedge formation that's on the RSI over here on the CME charts. But jumping over to the things we spoke about, right? Okay, so the traffic lights, I think it just clearly defines where we could be going in terms of the price action. Comes in here with this red line in there at 10,755. It's a clear, strong area for us to actually push up above. Failure to do so could then rest upon the 21 and the 55 EMA, as will we get support from those, and indeed the 382 Fibonacci over here. Failure to find support in those areas, maybe then start looking down towards the 10,500 area again, where we have the 50% area on that Fibonacci. Just take out the trend lines here, point out how this indeed does look like a symmetrical triangle that we're in as well, quite clearly here. So if we find resistance at this point, then of course that makes a good degree of sense. You'd be then looking down towards the 236 over here at 10,459, asking about whether or not that would be filled in. If we then push down past the 618 over here at 10,342, then of course, perhaps going to outside the bounds of this box or this triangle, you'd be asking questions about that, of course, or indeed if we turn around at this point here, that makes a good degree of sense itself, with the ultimate upward side target of 10,867 in terms of breaking the structure of this thing and just creating us a nice little fake out zone for us if we like to look at that, which we do on this channel, in around that zone there. And of course the previous lows and upwards in terms of the fake out from the triangle towards the downside all over there. And then diving over towards the BitMEX chart, where I already had this symmetrical triangle drawn in the past already here on the RSI, you can see that functions perfectly along with what we've been talking about with regards to the actual price action itself. And if I just move it up into perspective for us, you can see that we've got key areas towards the top side, which this downward sloping trend line, key areas towards the downside of this upward sloping trend line. The actual intersection point here comes along with the neutral line just here where the prices currently are, and we have the EMA kind of flicking between being positive and negative in the background. With the DMI here, this is of course the 24-hour time frame. You can see that we're dropping down and we're below 14 at the minute. We could be going back into volatility territory. Quick reminder to folk, when that happens and you get my new DMI sort of coding comes up and will give us a little warning that there could be a spike in terms of price action, whether that's towards the upside or the downside. It could be just a return of volatility to the market at this point. As you can see, it's functioned very, very well in the past, so we could see some of that on the go, so that's to be aware of. And we're currently challenging those two moving averages over there. What else did I want to talk about in today's episode specifically? I think that's really going to do it for us. I'll just reiterate the traffic lights that we've got here. Red comes in at 10,700 and 54. The amber light is 10,925 and the green light is 11,122 for us on that front. Of course, those are the three positive type angles to be taken on this thing. The negative type one could maybe just be summed up rather rapido by taking out this measuring stick here and saying going down towards the 200 simple there, the mid 9Ks, etc. And of course this pink line over here we've got drawn in for quite a wee while now for the 60% move off the back of that, and that would come in and fill that CME gap, and that's what we're looking at between these 2 points of view. Okay, 10-minute video that's going to do. I'm going to wrap up now, and I'll just have a quick couple of reminders then for people. Now do stay tuned for this bit because it's a key importance for us, right? There is the voice chat happening at 5 p.m. So be sure to join in for that. Of course, you can join in late. That's no problem. And that'll happen every Monday. And what else is there? Yes, if you're interested in this breakout idea, the phenomena of breakouts, let me just bring up the Discord here. And I can show you what have a little sort of bit of chat that I had when I was looking back at past videos with regards to the Bitcoin pricing here recently. If I go over to the Bitcoin thread and go back up to some of my chat from the other night, I was just choosing one of my earlier videos to watch, and I was like quite, blown away by the quality of the technical analysis in the video, the essential pivots one. And I'd also like to point out that if you watch this video from the 19 minutes and 30 seconds into this particular video called Breakout Context, you'll get a really, really, really strong idea about how how all this works. If you go down to if you're looking at these things from a number of different perspectives, what you can do is sorry, so that's me talking, same jumper I'm wearing at the time. So you can see in this video, this is a great example of how to play these things and how you can really manage your risking around them. Really worth checking out and joining the Discord. Of course, you can see this video on the channel. You just have to search for understanding the upcoming breakout or something like that to get to find that video there. It's from the 17th of July, no, the 20th of July. Of course, looking at the price action over here from the 20th of July. You can see that this was a key video to understand. Maybe we'll be entering into similar sort of phases soon enough with all this sort of price action. And I'll catch you next time. Thanks so much. See you then.